All right, what's going on, guys? It's Luke here. We're back with another education video. Today, we're going to be going over one of the simple ways that I use to trade my reversals. If you guys want to join the Discord, link will be in the pinned comment. And if you guys need a discount code to Alpha Futures, link will be in the pinned comment as well. This is a trade today that we took. I took two entries on this. This was the entry. This was on eval. This actually ended up helping me make 1,500 on eval. And then the first entry I took actually passed the eval. So we took an entry off the 30-second. But today we're going to talk over the 1 minute entry just because it's a lot cleaner for this example. But yeah, let's get right into this. Basically, off of market open, we had this huge sweep on liquidity. We ended up taking out London low and Asia low, and we ended up coming down and refilling within this 1 hour bullish fair value gap right here. Now, the thing with this 1 hour gap right here is it's still relevant to us, but it had already been tapped into, as you can see on this wick right here. But when you scroll down to the 15 minute, we see that we just wicked into a 15-minute bullish fair value gap, which hadn't been touched yet. And on top of that, it respected the CE point of this gap. It came down, wicked CE, and then started to show a reaction. So not only did we sweep out higher time frame draws and liquidity, we swept out London low, we swept out Asia low, we filled in a higher time frame fair value gap. And when I say higher time frame, I'm talking 15, 1 hour, and the 4 hour. And we respected the CE point of this gap. This is giving even more confluence for me to want to, look for a reversal type trade. So this type of reversal trade is the same thing as the MEC model. If you guys have ever seen like PB Blake's videos on the MEC model, it's the same thing. I actually discovered this on my own, and then I realized that's what people were calling it. So this is a way I use the trade from external into internal liquidity. External means on the outside, internal is like the imbalances. So you're trading from basically the sweep on liquidity into the imbalance. You're expecting the reversal. That's literally all you're looking for. So when you're taking these reversal type trades, you're going to be wanting to see higher time frame draws and liquidity get swept, which is going to be, your higher time frame session draws, your London lows, your Asia lows, your previous day lows, your previous day highs, your Asia highs, your London highs. And you're going to want to see those swept, preferably for price to tap into a higher time frame fair value gap as well, because this is going to add a lot of confluence into the trade. Because when you sweep out liquidity and you tap into a higher time frame gap, on top of that respecting the CE within that gap, there's a high probability price is going to want to come back into the range, rebalance, and then continue to make its move from there. So the idea of this reversal here is we're looking for price to come up and rebalance into this 15-minute unfilled fair value gap. So we come down, we sweep out liquidity, we fill this gap, we're at external, we want to see price rebalance the leg, come into this unfilled 15-minute bullish fair value or bearish fair value gap. And from there, what do we want to see? Price move from external to internal, and we want to see price, potentially go like this and continue down, or for price to come into this gap and continue up from there. But regardless, we just want to see, our idea is to catch that small reversal into the 15-minute gap, and we want to, we want to catch the move for the rebalance of price. So something that's going to add a lot of confluence into this trade and make it even more high probability, and it's going to turn it A+ is when you get an internal sweep on liquidity. And that's going to be right here. We have this lower time frame sweep on liquidity. We sweep out this small lower time frame low right here. And at this point, we get a beautiful recovery to the upside, and we end up inversing this 1 minute bearish fair value gap, which is the highest time frame inverse. If you scroll down from the 5 minute to the 4 minute, the 3 minute, the 2 minute, we have no other inversions that we can work with. And the highest time frame one here is the 1 minute. So after we sweep out session lows, we sweep out London lows, we sweep out Asia lows, we tap into a 15-minute gap. We respect the CE point of that gap. We have a clear draw on liquidity for price to come on and rebalance this 15-minute gap before continuing down or just continuing to the upside. Regardless, we want to see this leg get rebalanced by price tapping into this 15-minute gap. From here, we scale down. We look for the highest time frame inverse. We get a lower time frame internal sweep on liquidity. We get a 1 minute inversion, which is our highest time frame inverse in this case. We can enter now on the retest of this 1 minute inversion right here. So I take the entry on this retest right here. I believe it was on this candle right here. Just got a little bit of a late entry. I run my stops below the 1 minute gap. You could also run them below the low. But for risk to reward purposes, I ran it below the 1 minute gap because I like to have a minimum 1-to-1 risk to reward at the start of this 15-minute gap right here. So another thing here, we have buy side liquidity, buy side liquidity, buy side liquidity. We have all of this low resistance buy side liquidity leading into this gap. This is really high probability in my eyes. So I want to see price come up, rebalance this leg. I can move my stops to break even at the start of the gap, or I could take full take profit there and just be fine with taking a low, 1-to-1 risk to reward trade. So in my case, what I did today was I wanted the 1500 for my eval. So this is where I took profit. As soon as it ended up taking right here, I calculated with the 2 cons that I had added or whatever it was. Yeah, it was 2 cons. That gave me the 1500 I needed to hit the consistency for this eval. But if I was taking this on a regular day, I would likely move stops to break even or take a partial here, and then I would target the CE point or the 15-minute, the midpoint of that 15-minute gap. And you could also target these internal highs within the gap. Here you could take partials, and then you could literally at this point leave some runners to see if price will continue up. Because again, if you zoom out to the 15-minute and this gap ends up getting inversed, then what do you know? Price is just going to continue to run to that next buy side draw. We still have buy side draws in the higher time frame. We have this high up here, we have this high, we have this high. So you could leave runners up to there. Again, you don't know if this 15, all we know is that price is going to move from external to internal. We don't know if this gap is going to hold and push price lower, or it's going to get inversed and price is going to push up higher. We're managing the trade when the 15-minute gap's held, and it's risk-free for us from there. So we could literally do whatever we want from there. That's totally up to you. And as you can see in this case, price comes into that 15-minute gap, takes it, hits, rejects, and just floods down. External to internal, back to external. Literally, it can't get any simpler than that. So once again, to recap this and how you're going to be doing this, you're going to be looking for a higher time frame sweep on liquidity, which is going to be session highs, session lows, whatever it is. Preferably where we tap into a 15-minute or higher for value gap, so a 15-minute, a 1 hour, or a 4 hour. Even better when it taps and respects the CE point of that gap, which it did on this 15-minute. Again, I'll show you guys with this right here. We come up. We respect the 50% right there. We get a nice reaction. At this point, you're scaling down. You're looking for the highest time frame inverse. In this specific example, it's going to be this 1-minute inversion. On top of that, we have a internal sweep on liquidity. If you have an SMT internal sweep on liquidity, that's all going to add confluence and raise the win rate. So again, we get this 1-minute inversion right here. We enter on the retrace. You manage stops to break even, or you take profit at the start of the gap. And then if you want from there, you can leave runners up to the CE point, internal highs, or to the continued buy side draws on liquidity. Obviously there, you could have got away with targeting these internal highs right here. You could have had a 3R trade, or just about a 3R trade if you continue to hold that. Again, I took profit a lot earlier just because I was on eval, but normally I would at least run this to CE and just manage the trade break even. So again, you're looking for that move external to internal. You're managing the trade at the unfilled gap, and it's just a quick reversal model that's going to have a high win rate. Go back and back test this and practice this, but I promise you it is crazy high win rate. So that's going to wrap it up for me, guys. Hope you guys enjoyed this quick education video. I'll go through more trade examples in the Discord specifically like this. So if you guys want to check that out, link will be in the pinned comment again. But that's going to wrap it up for me. I'll talk to you guys in the next one. Peace.